Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday. Took me a second there. April 4th. Great to be with you guys this morning. Michael Boutros with you on the mic. Shen, Dagon's in the house. Iman, great to see you. Kelly, Christopher, Mark, Nick, we got all three Pete's in the house. Pooja, great to see everyone in the room. Aurelian, you too. So, interesting price action to start the day. We got ADP coming in much stronger than expected. Okay, 241 clip is what we got as far as ADP employment for March. We're expecting 210. There was even upward revision of 11,000 to the previous month's release from 235, 246. Broadly, good for the dollar, right? You'd think. We're still holding just below resistance. Ultimately, I do think the dollar is going to push higher. So be on the lookout. That puts into play really most effectively is going to be kind of like the euro and even dollar Swiss on this climb. So the things that we'll look to take advantage of as far as, excuse me, playing the dollar strength. On the menu for today, we'll go over euro from last night, pound, dollar CAD with an interesting rebound right off support. Still possible head and shoulder scenario there. We'll take a look. Dollar Swiss, pound CAD, just give you an update on that decline. Did break support. Aussie dollar still holding just below resistance and just above that critical support, 76.30, 76.12. Still my levels of interest for the entry on the long side. DXY, obviously we'll take the implications for there. And the SPX, let's start there actually. We've been following this setup here in the SPX for quite some time. Looking at it from the weekly chart, we came right off the long-term 200-week moving average, or excuse me, 52-week moving average right here. Where we settle this week is going to be very, very important, okay? 618 extension of the decline comes in at 25.86. That's the level I've kind of been working at as support. We did close just below it. Yesterday, we closed above it. Again, we're drifting below it. A really critical pivot level here. So the implications for the SPX on a break lower from here, guys, is pretty huge. So taking a look at what Treasury yields are doing, here's the 10-year. We talked about the resistance at 290 at nauseum since the start of the year. That's pulled back, okay? Still a little further to go, in my opinion, before it hits any major support, but something to take a look at, right? As we see more people flooding into the perceived safety of treasuries that drives yields lower, prices higher. Hi, Mike. Are there any strategies you use for timing entries of stock indices that differ from FX trades? So, Shen, when you're looking at the stock indices, in my humble opinion, the opening range tends to be somewhat even more pronounced because you have a definitive market open, market close, and then those timings become so much more critical, in my opinion. So I do tend to look at the opening range as futures markets come online at 8:30 into 9:30, sometimes 10. Remember, we're stressing what the range in price is, not necessarily time. But that tends to be something I definitely tend to look at. Also, just your basic timing. You don't want to get into a position at noon when everyone's going out to lunch in New York, right? You want to look at those really key time periods. The market opens, the close of Europe into 11. A lot of times you'll see a shift there and markets will rebalance. And then right into the close. That last hour of trade sometimes can be very telling as well. So yeah, you want to approach the equities a little bit of, I wouldn't say alter your strategy too much, Chen, but a couple of things to keep in mind when you're trading on the equities. Okay, I hope that helps. So looking back to the SPX, this is a huge region. Okay, watch 25.86 on the weekly close. On the daily balance, here's what it looks like. It's getting pretty ugly. Even the 200-day moving average hasn't been offering much of a pivot, at least on a close basis. So the risk is there. You have the lows for the year at 25.29, but you're really looking for a risk of drop into 24.90 or even 24.50 if we really materially close below the yearly swing lows there. So interestingly enough, on the rebound where we found resistance just now, or yesterday rather, I should say, precisely at the yearly low day close. That's 26.16. It's represented right here. We made that low day close on February 9th. It's been a pivot on both sides, but was perfect resistance yesterday, and here we are pulling back again. So look, this thing's going to chop around for a little bit. I think you're in a little bit of a consolidation here. Levels remain unchanged. 25.29, your yearly low, converges on the median line. That's the break that would really open up 24.50. Near-term resistance. You still got to respect 26.17. We just tapped it yesterday, the low day close. Bearish invalidation at the upper parallel. That's what we would need to really jumpstart a stronger rally. It's very tricky here. It's very tricky here from a risk standpoint on equities. There's a lot of headline event risk just popping out with all these talks on tariffs. Obviously, the move that you saw from China in overnight to increase tariffs there, shouldn't be surprising. I think there's a lot of merit to the argument that the markets are pretty much expecting something like this. I think the thing that becomes a little bit more concerning is if you start to see sort of more unilateral, not equal type of reciprocal type of tariffs, right? If they're trying to one up, that would suggest that we're building tensions and that trade war is basically imminent. So look, play it safe here. It's the start of the quarter, start of the month. I still think the risk is way to the downside below the upper parallel. Look for a resolution this week on whether we close above or below 25.86. That's a big level for me. Till then, it seems that every time you get some buying action up to the upside, sellers just rush in. Still looks lower. Okay, resistance on SPX still 26.17. Yeah, that's still the level to be. Obviously, 26.57. So the 26.57 level was kind of that opening or the highs that we made into that close of the month. Wouldn't want to necessarily stress that now since slope takes us a little bit lower. So I kind of put bearish invalidation a little bit lower at this point, Pooja, maybe on that 26.41 level. I was looking for something that makes sense. The only thing that kind of makes a little bit more sense to me at this point is to actually use the swing low that you made for the March opening range. So let's say 24 or 26.45 rather. That's the level. Just bring it in a little bit, right? There's a lot of slope there. The median line for the broader picture, that lower parallel converges ahead of that, so it would necessitate that break. It'll be a little more comfortable bringing that a little bit lower. Okay, thanks, says Pooja. You got it. You got it. So tricky, okay? Note the divergence that you're seeing in the daily momentum signature. That's pretty common when you're breaking a major key longer term level like this. The market will sit there as it kind of drive lower into it. But the fact that you're not seeing buyers really swoop in here as he did when we were at these levels previously is concerning. It is concerning, okay? So look, put a gun to my head. I do think you see a little bit of recovery today off these lows. Ultimately, you're looking to sell rallies basically still below the low day close until we clear that. So that's the SPX. We started off with that. We'll do that as number one. Number two, here's Euro from last night. Take it to the broader scale of Euro. I mean, look, I was looking at, we were chatting, me and Jamie back and forth. We kind of have like interesting opinions on where this goes from here. This is the level that we've been watching on the weekly chart for a while. I'm going to take it right back to basics, right? I'm not going to complicate things. Basic trendline support extending off the lows we made in Q1 of, this was actually the start of Q2 in 2017. Okay, you have three touches, confirms the trend line. That converges on former median line resistance. Once we broke above that earlier this year, we have not made a weekly close below. So, which means Euro's coming into some near-term support, period, end of conversation. If this breaks these levels, you're in for a much bigger decline. Check out the momentum signature here on the weekly chart, okay? If we start to slide lower from here, momentum closes the week below this trend line trigger, basic support trigger, 3-point touch, right? It would suggest you got a bigger momentum shift, and you should look for 2167 as just an initial target, okay? That would be kind of just a tag level that you'd want to maybe alleviate, take off some of the position. If you see that break, you're likely to see acceleration down towards 2040. Again, this is longer term stuff. We're looking at the weekly charts here, but it's important to keep in mind where we're coming from. We've seen consolidation basically for, geez, over a quarter at this point, guys, right? So if we clear these levels, big implications. Till that happens, I'm keeping my powder dry. Be very, very nimble here. Dagon saying a lot of time being spent at that trend line. Absolutely. I mean, on the euro dollar weekly. Absolutely, you're right. Right. So it's there now. So it's important to just stay as objective as we can here. And right now it suggests that price is coming into support. Okay. We just talked about the DXY, right? Or we will talk about DXY. We'll come to that right after that. And there's room there too for the upside move, which would inherently be a little bit of a lower move here in euro. So important to keep this in mind, okay? Daily chart on the euro looks like this, okay? Remember, largely speaking, the March range remains intact. Support level that we've been watching, 2240, 2229. This region here is still huge. Last lows that we made in March, it is the 618 extension from the decline off the high. So boom, boom, boom. And that same level converges on that same slope from the weekly chart. Okay, right off the April lows. 2 touch, 3 touch, 4 touch. Converges right there. So that's the level we have to beat. Note that the momentum signature has yet to break below 40 this year. Okay, here's 40 in momentum. So it's clear that, if we're not short into the break, we'll have the clear indication if we do have a confirmation here. If momentum dips sub 40 in the daily chart, you see the trigger break on the weekly chart into the close. It has implications. 2167, 2094, 2075. These would be near-term targets on the downside. If we were to break this level, but until we do, I can't get comfortable being on the short side just yet. Here's the near-term chart. So newly formed pitchfork, I think Jamie's looking at the same thing, suggests again 2029, 2030, 2040, same 10 pip region is so critical. And those lows from last late March, the 618 extension off the high, the November trend line. Support is the same exact slope, okay, as the support trend line from down here from last year. Okay, and then the one from November, which is represented here, is the same exact slope. You can see they overlap perfectly. So the levels are clear. Objectively, you should be looking for near-term resistance ahead of 2320. That could have been it, an overnight trade. Bringing it back to the 120. I'm really looking to see how this works out, but support is pretty close by. 2240, 2230, still the level to beat to really get the downside going. In term resistance, we should see resistance ahead of 2320 if this immediate advance has legs. Again, bearish invalidation remains basically at the 50 line. If this formation is right, 2360 should cap any major swings to the upside in euro. Ruth will hit sterling next. Yeah, she's saying what's happening with sterling, just keeps getting lower. Did you read my note on it? I want to be bullish, but the dollar strength has me pretty much restricted here because we'll hit the DXY too. But just give me a moment here, Ruth. Any questions on the euro? Basically, I'm looking for either another failure into 2320 and a pullback. That would be a nice tell. 2240, 2230 is your key level to break near term. If we break through the weekly opening range high, I wouldn't really mind that until we clear this 50 line here. If that gives out, then probably going to see a run right up into the upper parallel. But for now, I'm looking to fade strength off one of these two levels. This is the key support that needs to break. Any questions on euro? Now, remember that, looking at this from the dollar standpoint, in a DXY, we've been following that analog, and again, you guys are probably sick of seeing this every day, but it's important just to keep in mind that it does a lot, like we said, the possibility for a move higher here, at least this week, maybe into the start of next week. 91.33 being my line to stand on the weekly chart, but even on the nearer term for the DXY, just ahead of 91.31, you have the 91 handle to 90.90, this region here. So if we topside break, you have the 50 line slope there at basic 38.2, the March opening range highs. It's loaded. Okay, it is loaded. Decent pivot in price. Former swing lows from back here in what was that? September, okay, of last year. Lots and lots there. So the levels are pretty clear. If we get the topside break in the DXY, we get the move lower in euro, you know where to look. 2230, 2240 there on a stretch here, 90.90, but we'd look to basically fade that move. On a downside break below 89.60, well, that clears the way again, okay, for the resumption in the euro, and I think a bigger move targeting the low day close here at 89 in the DXY. But till this happens, and the volatility that we're seeing in equities, again, kind of not filtering across the board, yen being the biggest movers here, but We'll go over dollar yen if we have time. I'm just not touching that thing right now. But 90.21, get a pretty clear range for the opening range for the week. Look for the range break. It's Wednesday. Um, Again, I think the risk is still for a possibility in the move higher. Now, the momentum has been very, I don't even have a word to describe it, just kind of like blah. But it certainly is being held to support ahead of 40 and even 50 bounces, which is pretty constructive, at least for the near term still. Okay, so for the DXY, here's the daily chart looks like. Again, same thing, momentum holding 60, not dispelling the broader downside bias we've been working with for the last year. It hasn't dispelled it yet. 60 still continue to hold as resistance. So the break here, yeah, 91 could be a nice little big target there. Again, that swing low from last year. That is actually the 2017 low. Look at that. I have it labeled here on the daily chart. So, keep that sort of possibility in play here for the DXY on the upside. Any questions on DXY or Euro? To go back to your question, Ruth, on sterling, number 4 for the session. Yeah, I mean, it looks like it has to correct lower before we move. Here's the weekly chart. There's nothing here to prompt any kind of near-term action. Okay, we're sitting mid-range for March. Momentum is holding well above a 4-point support trigger. So that's, you're not near that trigger, not really risking a major decline. This thing could still slide lower before even tagging that. Same respect, resistance is still up at 142. So you got another 200 pips to go. What do you do? Daily chart in DXY looks like this. Again, what the heck do you do with this? 139.30, Ruth, if we break lower, that's my near-term bullish inval. Okay, basic slope again, similar to what we're looking at in Euro, basic slope extending off. This is the November lows. And the 50 line for that broader operative pitchfork we've been following, all of that converges on the swing highs for the March opening range. So that's sort of, if we correct lower, that's the extent of which I really don't want to see much more damage to sterling, because beyond that, I think you'd be facing a lot more downside pressure. But from here, how to trade it? Knowing the direction is only part of it. How to trade it? For me, it's either a drop here for a long position, or we have to clear the high day close again, and get some sort of formation, some sort of structural advance here to give us some sort of technique on how to get in. Here's the intraday chart, okay? And again, that trigger break leaves the risk that this is still, look for another wave at least to a new low before we correct higher. Here's the intraday chart, okay? And here are the levels that we've been following. So no change to the Euro levels. We talked about that. Here are the levels that we've been following on the intraday chart. And if you read the update, guys, remember the last level that we cited as far as our bullish invalidation was 40.18. Okay, the low that we made was 40.12 or so. Okay, before we turned higher, that's where we gapped into before moving. So your opening range for the week just got tested, remains intact. And like I said, play the opening range break as it happens. If we breach the upside, great. We want to be long. The tag that we got yesterday seemed too clean to be true. Basic trendline support, 1 touch, 2 touch. That's a pretty clean touch right there. Looks like a defense. If we make it through these highs, look for continuation, 41.33, again, that high day close, and then up into 42. But, the levels remain unchanged. I have to stay disciplined, Ruth. At the end of the day, I marked 40.18 as bullish inval. The 100% extension came in at 40.20. So if this is corrective, this is kind of the extent of where you want to see the drop hold. Dagon, is there a big discrepancy there? He's saying, look, remember that you're looking at the IDC and not the FXCM. Yeah, is there a big discrepancy there? As far as the weekly low is concerned, at the end of the day, you have to respect this basic trend line. And if we see a dip below the bullish inval 40.18, prepare for a deeper drop. 39.77, check it out. Bigger level will be 39.14, 39.08. That's the 1618 extension off the high, nice 618 retracement off the low, confluence region there. be a nice area of which you'd start to base and look for sort of the bigger resumption. But for me right now, the focus is on a break of the initial weekly opening range. He says not huge, but a little. Yeah, there's typically a little bit of a difference. Also remember that the closes are different between IDC and FXCM. That's the biggest difference. So any questions here on sterling? We want to be bullish, but this dollar strength has us skittish. Rally in momentum since the low that we made to start off the week has found resistance ahead of 60. All hallmarks of, a near-term bump within the broader down correction. So let's see if we can't see a change here. Ruth, does that answer your question? Sterling event risk this week is pretty limited. So, we still have non-farm payrolls on tap. ADP, like I said, today was strong. Just going back and taking a glance for you guys this morning over, how ADP has fared in comparison with the non-farm payroll number. It's been a pretty decent leading indicator. You always hear me say that a lot of people look to ADP sort of as a reflection of what we should be expecting with non-farm payroll, but ADP is notorious for missing huge swings. So usually if ADP is stronger or weaker, yeah, NFP may reflect that same type of sentiment, right? But the disparity of how big that swing could be is usually missed in the ADP employment, which is just private payroll. So that being said, if you get really strong employment, remember the Fed really is focused right now as it stands on the inflationary picture. So we'll have to look at the wage inflation numbers, but yeah, it might be worth another pop higher that fuels that last rally in the dollar that we're looking for into the close of the week. And that could, if not drive this lower, limit sterling upside potential. Let's just say that. Okay, so if it goes below 18, then change to bearish. Yeah, Ruth, bearish on the immediate front, right? Like I said, 39.77, 39.15, that's where I would really want to see this thing start to hold again, is down here. But yeah, I do think if you break the lows here, specifically after this rebound, this is the weekly open right here. You would be expecting that drop towards 39 in my humble opinion, Ruth. Make sense? And again, we're playing as objective as we can. Weekly open, weekly opening range lows. Objectively, if you break there, probability is in your favor that the extreme will be set somewhere into the close of the week. Okay, we try to keep things as objective as possible, as disciplined as possible. All right, so that is sterling. See if we can't get some clarity here over the next 24 hours. Dollar CAD. So look, this one's very interesting. I think there's eminent entries here. On this rebound, I really, ideally he kind of holds the high we just made, but 28.50s, I think, is what I noted in the update last night. Let's see where we were. 28.30s, okay, is what I noted was the March open. So here's the thing that we want to keep in mind. So we were following dollar CAD obviously very closely over the last couple of days. We started off the week looking at this advance here. I thought we were going to get one more stack higher into the median line, maybe that 38 to the 50% retracement for the advance, but noted that we basically hit an exact 618 extension. That turned out to be the high. Okay, we pulled right off there as soon as we broke the weekly opening range low. There was confluence support, basic channel, the median line opened up to decline. 28.29 was our bearish or bullish rather invalidation. That's really what would validate the move. So we got the move lower into the 38.2. We came back, checked 28.29 as resistance, and that's basically what we're doing right now. Okay, this is near-term resistance. Ideally, we stay below the median line. Bearish invalidation now is at the weekly open. So if we make it back through the weekly open, back through basic slope, you'd think, okay, you'd have to look for a tag of the upper parallel again. So, on whole, just to remind you guys where, how critical dollar CAD is, this was huge. Outside or a reversal candle off of a major fib. We had slope. We had upper parallel, you name it, right? This is still pretty hairy here, which is why for the downside, we still need to see that drive through 27.25, the outside high week reversal close for December. You have the long-term 200-week moving average just below. That's where the weekly push I really want to see drop into. Now, former trigger resistance, break below this would further give us a little bit more confirmation on playing the reversal. But just know on a weekly basis, you're coming in some pretty hairy levels. Dollar CAD on the daily looks like this, okay? Perfect tag of resistance. We just talked about that. Beautiful reversal. We noted this as sort of a key support barrier last month. That's basically what we're testing right now. You're looking at a basic 38.2 retracement of the advance and the objective March low. It's 28.03 into 27.90. On a daily close basis, we need to clear that on the downside to get the resumption. And again, you'd be looking for the median line here to be a soft target, wouldn't really like, jump, but this would be the next big level. You got the 100-day moving average, former swing highs from February, 50% retracement, 26.85, basically just below the 27 handle, that whole range. So something to keep in mind, okay? Obviously, there was perfect divergence, trigger break on the reversal, looks pretty good. Now, it's way too early to start saying this, but if we do break this support, I think this is an objective of where just to kind of as a drill, your basic measured head and shoulders objective play, if this is to be interpreted as left shoulder, head, right shoulder, lopsided shoulders are pretty decent levels. Here's the neckline break, right? It would look like this, just for reference. I don't want to clutter up this chart more than it has to be, but that's what it would look like, right? And if we were to clear that to the downside and really push lower, the measured move actually targets like 24.80. Now, that's not the way I personally trade. I'm not going to just go into a short on a break here and target 24.80, but just to put things in kind of in context. If this does turn out to validate that move with the break lower. So too early to tell. End of the day, 27.90s, 28 is kind of what we want to see this thing close below to mark resumption. In such a scenario, again, that risk to the downside materially starts to be a little bit more evident. Aurelian says, sorry, I need to leave. Where do you store your previous videos? I see Jamie's in archives, but not yours anymore. No, they should definitely be in there, Aurelian. If you just go to the live session page, the last previous webinars are always right here. Also, if you go to the intraday charts, my last webinars personally are right here. Also, if you just go to the aggregate intraday post archives, that'll have all the reports and webinars. So they're all archived for you right here. Okay. Cheers, Aurelian. He says, got it. Dagon says, look for a pullback to the trend line. I mean, head and shoulders trend line. So yeah, I don't want to really work with that head and shoulders trend line too, what is this? Too aggressively right now, okay? For me, this is the support barrier that we had marked since the beginning of the month. And that's the level I'm looking at. I'm trying to stay as objective as possible. Basic lateral pivot in price. Just look a little bit to the left here. You also have the August highs from last year. Pretty big level. So if we break this, test it as resistance, that'd be your entry for the move lower. On the intraday chart, I think this is what you're looking for, Dagon. Here's what it looks like. Okay, so pretty clean price action. This is the same slope, okay, that we've been following in dollar CAD since pretty much the start of the month. Okay, even if you go back to 328, it's the same slope. So fast forward to last night, again, still bearish below the median line, bullish or bearish inval. What would turn me constructive would be a break above here. So right now on this approach, you look for some resistance here, you look for some triggers, a hold at 60 in momentum. If we break higher, I'm not going to do anything. This is nowhere zone here, but this would be the last level. If we clear that, the idea that dollar CAD is breaking lower, I think we have to put that on the shelf. But for me, I'm looking for entries at one of these two positions here on the advance. If you're holding longs, because there's a decent divergence trigger here to the upside on that attempt to tag that parallel. If you're holding longs, take 3/4 off here. I kind of pretty much try to clean up as much as I can. Stops at break even or better. Last level would be right ahead of 28.95 on the stretch if you're looking to take a bigger bite there. Also, just a really near-term sort of approach on this, the 618 of the weekly range so far. Okay, highlights some levels, 25, 28.60 basically on a stretch. 618 comes in at 28.79. So you know what I mean? If you get failure ahead of one of these levels, that's just as good. But I kind of want to see this capped below 28.95 on this stretch today. Make sense? And the downside targets are, I mean, they're pretty well defined. 26.85 would just be the initial target on the move lower, but you do have the 200-day, or this is the 100-day, excuse me, moving average right there as well. One thing oh, that's what I wanted to do. I just want to see what this looks like. Give me one sec, guys. Huh. Okay. Yeah, I'm going to add this here. 618 extension actually converges 2750 basically into tomorrow morning at that lower parallel. So keep an eye on that. Okay, so that's dollar CAD. Let's see how we fare. We want to see some exhaustion on this move higher off support. That is number 5. Number 6 is Swissy. Swissy. Since when does Boutros trade Swissy? Well, you know, it looks pretty interesting here. It's worth taking a look at. As far as the advance is concerned, it did look tired. I noted that yesterday, but when we pulled back, we came right off this level here and rejected higher. And here we are still unable to mark any new highs in momentum. So, you know, look for a pullback. I don't want to play this on the short side yet. It would be much more interesting for me on a short side trade if we get off 96.13, okay? Because that's a 50% retracement of this huge decline off the 2017 highs, but also the 100-day moving average as well as the 50 line for this current upslope. So we do get a sort of a tag into that region. I do think it's worth a shot looking for some exhaustion. Taking a look at the momentum signature, you know, kind of probing through 60 here, but not really getting much of a hardcore break to the upside either. So still think the near-term risk is higher. For a near-term approach on an advance into 96.13 or even that 200-day moving average, I still think you'd look to fade that move. Okay, near-term support at this point, we noted it next at 95.63 yesterday. Obviously, we probed below that on that spike. But I'm still going to continue to look at that specifically because it starts to converge more so on that slope today. So look for near-term support at 95.63. Bullish inval, we make it objective break below Friday's low at 95.25, 95.24. You look for a larger setback. Here, let me snap this red line for you, December trend line. So no change to any of those levels from last night on Swissy. We basically came into here, held a support, rebounded. We're holding this really tight range. Like I said, momentum not very encouraging, not much reflective as far as new positioning is concerned. If you're still holding the long side, to stop below this swing low is the only thing I would be risking at this point. You know, you're pushing multi-month highs. Be cautious here on the advance. And that's Swissy. Not so interesting overnight. It's kind of been boring trade so far, so I'll continue to track that one. Moving right along, number 7, the oddball, Sterling CAD. Seen a little bit of a pause. Here's the last update. We were looking for exhaustion ahead of 81.90, basically ahead of 82. It was 81.93. You know, for this downslope to play or to keep it the downside in play. Looking for a break below 80.25 to really get things going. So we got that break. The 50 line is held to support, and we kind of been stuck there ever since. Here's pound cat. Where's pound cat? Pound cat. Okay, here's what it looks like. So you got the downside break, took out 80.25, you saw that 50 line hold is perfect support. Here's the rebound. The 50 line hold is resistance for a few hours to break higher. So we're looking for resistance basically into these levels. The weekly open comes in right here. Let me mark that for you real quick. Here's your weekly open. Okay, just ahead of that 100% extension. So like 80.95, 81.05 is where you want to see this thing start to hold resistance if we're still going to move lower. Okay, so moment of truth. Remember, this is a multi-month basic objective trendline break, right? Break of support, could see a check of resistance, so I'll lock that into 81. Kind of want to see the upper parallel hold if we're moving lower in Sterling CAD. And again, downside targets remain unchanged. 79.34, completed 1618. Is that the high? What is this? Yeah, this is the May high from last year. 178.53 would be the next downside target. So put that as bearish inval. This is where we want to see hold as resistance. Can clean this up a little bit. Does that offer anything? Huh. Further highlights it. Can't hurt. All right. It's actually pretty clean. Price action is pretty clean. And actually, if you look at even at these two highs, when you try to assess slope, just take a parallel, match the highs, you see again perfect tags, and that just reinforced that we're working with the proper slope. Okay, or the gradient that the market's moving at. So keeps the focus lower below 81, bearish inval. We'll keep it at that crosshair right there, 81.25. Any questions on Sterling CAD? We got a packed room in here, guys, today. Just want to remind everyone they have that camera button. Use it to your benefit if you want to take a snapshot of any of these charts. They're the same charts as I always try to update you if you have any new changes to levels, but always feel free to take an updated view of that if you need be. Okay, last but not least, Aussie dollar. So this thing, you know, patience is a virtue, but with Aussie, you know, I feel like it's one of those trades where you need to be in it to win it. And I just, you know, I'm very reluctant. I'm very trigger shy this week. Both of because where we are in time and all the political event risk that's happening and all this nonsense. But look, you know, the game plan's unchanged. Okay, the game plan's unchanged. We've been talking about 76.36 and 76.12 for like weeks. If this was the low, then the same game plan that we talked about earlier in the week, 77.30 break to the upside is what we need to see clear as you know, sort of an invalidation for the near-term downslope. Period. It's a huge, huge region of support on every type of time frame that you can look at. Aussie on the weekly, big level. Ideally, you get one last stab into it because we just grazed it on this decline, but markets don't work in a vacuum, right? Markets don't care what I think or what I want. If it turns higher from above here, we have to respect the upside. Period. End of conversation. As it stands right now, this is the world for Aussie. 77.50, 76.30, 76.12 on the weekly chart. Daily chart, okay, same two levels are reflected. Basic trendline support, 1, 2, 3 touch, converges there now. 100% extension for a corrective move. Basic slope off the 2016 low. All converges right in this little nestled region. So another drop here for a long position would be like the yay play, like go Aussie. Or if we break higher, you know, 77.30 would be the near-term approach, would shift us higher, but a weekly close above 77.50 is really kind of clear the way for a nice rally. Okay, now where does that put us with the dollar? Well, we just talked about the dollar and the possibility there for the move higher on the index. Remember, this is what I kind of tried to allude yesterday. We don't want to take the dollar index as sort of a carte blanche against all the dollar crosses in general. Obviously, the implications, like we said, for the euro are sort of a really nice move for a drop lower, 22.40, 22.30, that region. For sterling, looks a little less heavy, right? For Aussie, if we get that dollar strength to drive this lower, we're looking for that drop into 76.12, 76.30 for entry. If Aussie just decides to breach that near-term channel to the upside, well, we'll have to look for that breach higher. Initial target 77.80, 78.12 on the upside for the near-term chart. Any questions on Aussie? It's been the same game plan for a while. It's been kind of blah lately, but same game plan. Either the drop into here for the long, or if you're taking any long exposures, just play them against the swing low, okay? Because if you get a break at the swing low, you know where to look for re-entry. So don't, go betting the farm on this just yet. We'll get it. And that's Aussie dollar. Any questions on Aussie? Oh, and also remember for dollar CAD, even though we talked about dollar CAD already, we still have double whammy employment data on Friday. Dollar Canadian Canadian job employment or the labor report rather, as well as non-farm payrolls here in the United States, both hitting the wires at 8:30 Eastern. So could be a player. All right, your questions. Eman wanted to take a look at Kiwi. Yes, let's take a look at Kiwi. This will be number 9. Not a trade I'm big on, but let's take a look. Kiwi looks like it's still holding the February and March OR. Am I right? Yeah, we never cleared the February OR. You're absolutely right. So here's your February open, right? Set a low early in the month. You probe through the highs, but you never make a close above it. Essentially, that holds. Yeah, March was the same thing as a wash. You made a pretty big dramatic break to the downside here. Remember, we were looking at that. I thought we were going to get a pretty nice resumption for a larger pullback. That quickly refuted the following day, and here we are still in consolidation. Look, it looks like it's in a near-term consolidation. I think Jamie's looking at this as a triangle as well. I think he's got merits to that, but outside reversal off the monthly open, off of last month's open, and a push here, if we do clear basic trendline resistance, which it looks like it's doing, yeah, that would risk a move up in 73.50 in my opinion. Again, right, contrary to the dollar strength story. So here's what I've been looking at. I mean, obviously, I must have spec'd this out at some point last week. E-Man, again, just as a disclaimer, I haven't personally been following this trade, but made a pretty nice 1618 extension there, turned right off. Let's see if we can't dress this a little more. Hold on one sec. Yeah, 50% extension retracements right there. Forget this. Hey man, you're right about the opening ranges, but the problem is that the February opening range is so massive that if we were to wait for this range break, that means you still have another like 200 points to the upside before you even get clarity on it. So you're right with making it without observation, but how do we approach it? How do we approach it? Okay, let's get rid of this. This is sort of your immediate upside range targets. Remember, I always love 618 retracement, convergence with a 100 off the low, or vice versa. It gives you 73.28 to 73.38, 10 pip range of resistance that you want to pay close attention to in Kiwi as far as resistance. So watch this range here. And this is no longer the low day close. Let me get the updated low day close. Bear with me one sec. Oh, this was the low day close for Interestingly, post high, post the yearly high, the low day close actually comes over here. And that would be a decent near-term bullish inval because the weekly open is actually right there as well. So that's sort of what I'd be working with, just on a shotgun approach here, E-man, for Kiwi. You're basically, 72.95. You're basically checking resistance right now. 73 in general because you're looking at the former swing high from late April. But this is the risk on the upside if you do clear that level. You're absolutely right in that the February, March opening range are intact, but that's still way up here. So don't see how that necessarily will help our case for now. As it stands, decent region. Actually starting me looking for some short exposure again if we get up here. But again, the big problem with this whole setup is, on if we are breaking that yearly trendline resistance, man, you're taking a pretty strong stance on a bearish dollar approach. Just not seeing the turn there just yet. Don't want to stop us from necessarily doing it, but even if you look at this on the 120 basis, you see that the momentum signature just keeps butting up into 70 like a ceiling right here. Boom, boom. So you're making obvious divergence here as price action is making higher highs. So I don't know how you would approach this as far as alongside play on a pullback. On a pullback type of play. Actually, let me just see. Where's the 6-1? Huh. Okay. On a pullback type of play, former swing highs, maybe 72.50. Look for some support there at this pivot zone here, 72.50, 72.60. But bullish inval would be 72.27 as long as we stay above the March low day close. You're basically pressuring that resistance break. Eman, does that help? Again, the slope looks all right. It's not the cleanest thing per se. I'm not sure when I added this, but does this offer anything? So you see how when I drew this slope, guys, it continues to highlight the same regions, and that's something that you always want to take note of. So the basic slope that we're looking at obviously highlights this region of resistance here. If you take this steep slope just right off the near term low, high, low, the median line actually converges on that same region into tomorrow. Okay, the lower parallel converges on the low day close for March that we just highlighted as near-term bullish inval tomorrow. So, you don't want to actually sit here and look at a chart that looks like this and try to trade off it. It'll drive you crazy. But just as a reference tool of how you want to reinforce levels that you're looking at, look for as many factors. Okay, we have this here. We have a trend line that's converging on these Fibonacci levels. Great. We have some swing highs there. Great. The more emphasis, the more evidence you can gather to support your thesis, the more conviction you have on the trade. And that really, guys, should be your main contributing to factor when trying to decide the logistics of how heavy you're trying to get on the position. For me, it's all about how much evidence do I have? Is it a high conviction trade? Is this a level that comes up on multiple time frames? Is this a level that has multiple aspects, technical aspects I'm looking at, whether it's a high, a low, slope resistance, or support, Fibonacci level? The more evidence I have, the more yeses I can say to that, the heavier that trade will be for me. If I'm taking a kind of Hail Mary, this looks like a decent support trigger, it might be resistance, kind of a scalp, well, that one you want to approach with, much lighter hand. Leverage should be, leverage is something that we don't really talk about, as much because it's so subjective, but you really should use that to your advantage, guys, on high conviction trades and on low conviction trades. And you see that in Jamie's trading when we put out the swing trades and we put out, how heavy of a position we're trying to take on that. That's basically what we're gauging. So hope that helps there as much. Iman says, yes, thank you so much. Looks like it's struggling ahead of 73 with that divergence. But yeah, so like I said, it might give you the pullback, and that's where I was saying, man, might be a decent entry if you get 70, 72.50, 72.60, be a nice pivot range. Um, and you're basically trying to trade against the low day close. But any Kiwi event risk on tap? Let me check a quick look. No, nothing major. House prices today, but it's going to be the dollar. And by the way, here's Kiwi Amen for you on the weekly charts, just for your reference. Did just come off the 200-day moving, the 100-day moving average, that blue line there. So might be sort of a consolidation pattern break to give us that last spike higher. Longer term, obviously the yearly high comes in at 74.35. The yearly high day close, or the yearly high week close, 73.90. So watch those two levels. But I'd still put it as a low conviction trade for right now. Okay. So that is Kiwi dollar. Any other questions or trade setups you guys want to review? A quick glance at gold. We've been following this one pretty closely. Here's what gold's doing as we get deeper into the session here with another volatile session expected. Wow, look at this thing. I didn't even take a look at this today. Made it through 1343. Awesome. So look, it's pretty clean within the confines of this slope. Again, the cheating slope. I call it the cheating slope because we're breaking the rules with this one, but it just continues to follow pretty good. The median line converges on the upside targets that we've been watching. It's the upside targets that caught resistance last month, and that's basically 1352 into 1355, that $3 range, the $2 range, really. It's pretty big resistance here. So one thing that stares at me in the face and scares me is this could be 1, 2, 3, 4, 5, which would make A, B, C sort of a risk of this being corrective. But guess what? The 100% extension comes up, that same exact level, 1352, 1355. So just as a drill, even if that is the case, a three-wave pattern still has us looking for 352. Oh, Shen, I didn't even see your question. He says gold, please. Well, there you go. Does that make sense, Shen? Any questions on that? Remember the bigger trend, where we are in gold. Weekly charts on this have been pretty clear, that we're basically still holding the yearly opening range. But this whole yearly opening range takes place within the confines of a broad uptrend, multi-year uptrend. So, immediate focus for me, Chen, again, is up into 352, 350 zone. I wouldn't get aggressive beyond that. If we do see a daily close above that level, I think we're well on our way back towards 1366 and 1370 region. But, I would want to see also complementary price action in the dollar starting to pull back as well for me to get really aggressive beyond 1350 rather. If the dollar really starts to intensify in the upside, it's going to be limited upside here for the gold trade near term. Makes sense? He says, yes, thanks. All right, Chen. More than welcome, sir. So that's all I got, guys. Keeping in mind, again, we're still pretty early in the month here, but some pretty provocative levels, both on risk markets as far as what the equities are doing, and more so also on the dollar crosses. Some of them coming into pretty big levels of support. Remember the sterling, if that falls through, look for the bigger setback ultimately to buy again. Dollar yen, I know we're holding longs on the swing side of trades. I just can't kind of get too excited beyond that position. So let the position play out as warranted. Ideally, you do see that stretch higher towards 107.50, maybe even 107.80. But the big reversal that we made last week, I think, is something that we still kind of need to respect on hold for the dollar yen trade. So no changes that. I would just follow the swing setup as is. I don't know. Again, as you know, I ask this a lot. I never really get a very proper response from you guys. I don't know if you're trading the cryptos or not, but geez, we came off a pretty big level in Bitcoin. Still think you can see a little more upside near term, 77.37. Ideal scenario, this thing still gets deeper into 60.39 on the downside. I've been charged with following this for IG Corporate, and they've just been asking a lot of questions. So I've been sending them some pretty regular updates on it. Here's, for what's worth looking at if you guys are interested in it. It's been pretty big, up 64.90. Low day close for 2018 still remains 77.37. That's still the level to beat before you even start to think that this thing is gonna resume higher. All right. Okay, guys. Well, there were no other questions. I have been reading the update. Very helpful. Hey, cheers, Chen. Yeah, I mean, let me know, guys. Any assets you're looking at, I'm always eager and willing. Charts are my life, so anything that you can send me that I'm not necessarily already looking at, I'm always willing to take a look. But I hope that helps. Stay tuned. Obviously, Jamie will be on in just a little over an hour and a half with the midweek strategy webinar to go over some of the swing trades and longer term prospects that we're looking at. Stay tuned for that. That said, we'll wrap it up right here. Guys, I'll see you tomorrow morning. Best luck trading. Cheers.